Warren Buffett's Berkshire Hathaway just reported their quarterly earnings, and their operating profits fell 8% to 6.71 billion, and this was down from 7.29 billion a year ago in the same quarter. Now, many think that Berkshire Hathaway is this big conglomerate where they have arms going into multiple industries and sector, but roughly 80% of Berkshire's value is in 5 stocks. The first one is Apple. Apple accounts for roughly 39% of the investment's conglomerate equity holding. Buffett's company began investing in the iPhone maker back in 2016. And the combination of capital appreciation for existing shares in the portfolio and additional stock purchases elevated it as the top equity position. So when we go to the monthly chart, we can see that Apple's pretty much been sideways since June of 2021. We have monthly buyers at the 127 level, and we have monthly sellers at the 178 level. Now, interesting enough, if you look at the daily chart, on the daily chart, we can see that price just fell and closed below the 200-day moving average. So anything that closes below is kind of bearish, anything above is bullish, and anything below the 200-day moving average serves as resistance. We also see that on the daily chart, price just broke this short-term uptrend line. So I would anticipate, if the markets continue to decline, Apple will also decline, but could be a buy at the monthly buyers level at 127. Now, the next stock that makes up roughly 80% of Berkshire Hathaway's value is Bank of America. Let's go start with the monthly chart. Now, Bank of America was under strain back in 2011. They were pretty much about to go belly up, but Buffett saved them. He presented a proposal that gave them a boost of fresh capital. It consists of warrants, and if price hit a certain price, they would get a bunch of Bank of America shares for, I think, a third of that market value at the time. Nevertheless, Berkshire now holds about 13% of all outstanding shares as a result of them executing these warrants. So if we go to the monthly chart, we can see that there is a monthly zone. We're going to say at $29. Currently, price is at $34, so it could drop another $5 or so in the coming weeks. Okay, let's go to the weekly chart. So price is sideways and has been since April of last year. You can also see that the 38 level is a decent risk slash resistance slash support area. Right, you got one touch. Let's just mark that off. Two touches. Just came back to that level. Came back to that level again. I like this area here. Let's just code it, and we're going to look at it on a daily chart. Potentially the area already hit, or did hit rather, but we're going to analyze it and dissect it a little bit more. Just looking on the downside here. Okay, let's go down to the daily chart. Not enough with the structure, but it did work, as this was the origin of the strong move down, represented by 3 extended long-range candles. You had a gap, you had a doji, and then a gap. When price came back, price is at least pulling back. So we'll say that is daily sellers at the 37.50 level. Okay, so what do I anticipate? Well, price is range bound, even on the daily chart. However, like Apple, price is currently trading at the 200-day moving average. Price has also breached the 50-day moving average and the 100-day moving average. So this is what we call stacking, when moving averages are on top of each other, and if price is below the stacking of the simple moving averages, it serves as a strong resistance level. So I would anticipate Bank of America continuing to decline from its recent high of $37. Now the next stock that makes up 80% of Berkshire's value is Chevron, ticker symbol CVX. Let's go to start off with the monthly chart. Now, Berkshire Hathaway initiated a position in Chevron back in 2020, but it went really heavy in 2022. It just so happens that Chevron was the best performing stock within the Dow Jones in 2022, thanks to the crazy increase in prices, with the catalyst serving being the Russia-Ukraine war, and the U.S. putting all type of sanctions on Russia. Alright, so when we look at the monthly chart, we can see a monthly resistance support level at 130. Currently price is at 162. I also like this area as a monthly buy zone, so I will code that. And again, I mentioned that Chevron was the best performing Dow stock in 2022. Here's January of 2022, and you can see that it went up substantially. Okay, let's code that as my monthly buy zone. At the 113 level. And up here there are suppliers, but we'll see if we can identify the zone a little bit better on the weekly chart. Okay, so we can see Chevron had a double top. You could say that is an M pattern, which is a bearish price pattern, price structure. It did break the low of the M pattern. At the say 67 level. So I'm expecting further declines, personally, because of this M pattern, double top. This area interests me as it broke the low of the M pattern. So I'm going to code that a bit. And we'll see if there's a good entry on the daily chart. Don't really see anything on the downside of interest. Alright, let's go to the daily chart. Okay, so it appears that price has been range bound for the last couple of days. So we will get a breakout at some point. Just don't know in what direction. I would anticipate if price pulls back up, we'll call this the daily sellers at 172.50. We could see further declines. This would be my target, right? You had a drop, price was deciding what it wanted to do next, and then you had a gap up followed by another gap. So let's just note this as the target at the origin of the gap. We'll say short term target at 145. Move this arrow up a little bit. Or what we could see is a breakout to the downside. Usually breakouts return to the origin of the breakout. So then we could have a pullback before prices decline. A lot of the next direction for Chevron is going to be based on China really reopening, potentially more sanctions on Russia. We're about to be in March, so we have the driving season coming up. Oil tends to move higher going into the summer months, so really all depends. But the play is, if it pulls back to the daily sellers level at 172.50, that's an opportunity short. If we break down from this range bound level of 161, we could pull back and then drop. It really all depends. So the last stock making up the 80% value in Berkshire is American Express. Let's go to the monthly chart first. American Express has been on a significant repurchasing binge lately. It's retired roughly a third of its outstanding shares during the past 10 years. That has benefited Berkshire tremendously. As shares are taken off the market, you undilute the shares that investors have in the stock. As a result, Berkshire currently owns about 20%, and that ownership should only grow as they continue to buy back their shares. So this area, although it's been breached, that's clearly a level of interest for monthly buyers. The next level would be at the 120 for monthly buyers. So we're going to say this is monthly buyers at 136. And we're going to say that there's monthly sellers at the 190 level. We'll call it 192.50. Okay, let's go down to the weekly chart. Looks like towards the end of January, price just spiked $20. I don't know why. Okay, let's put these in play here. So for the past 4 weeks, price has been range bound. We did have a gap. Gap hasn't closed yet. Last week was a indecision for buyers and sellers based on that doji candle right there. Okay, let's go to the week, to the daily. Just so you can see, we have the 8 simple moving average and this is the 13 and the 26 moving simple moving averages. They are now pointing up. We had a crossover, but there are a lagging indicator of price. So let's go to the daily chart. Now what we couldn't see, what we saw on the weekly, was range bound. When you go to the daily, you can see that it appears to want to roll over. Okay, the reason why it shot up was because of earnings. So they must have had a great earnings. All gaps get filled, whether it be short term or long term, but all gaps do get filled. Let me just see if there's anything up here of interest. No, not really. I would say that if you have a break, let's put a horizontal line there. That's the line in the sand. At the 172 level. You close below 172, it's going to now serve as resistance, and price may continue just to decline, potentially filling a gap. So then 172, you have this little bit of support here, and that's why I'm saying it's the line in the sand. It did bounce off that support level on Friday. Maybe it's just pulling back to move higher. We'll just have to wait and see how this week pans out. So those are the 5 stocks that make up 80% of Berkshire's value. It is not a conglomerate. Just to let it be known. Until next time.